Hey traders, welcome back to the weekly Forex Forecast. From today onwards, we're going to be using the brand new Hedge Dash trading app in the weekly Forex Forecast videos. And I'm super excited about this. It's been in development for about a year. And all of the analysis that I do and all of the trades that I personally take during the week come from the Hedge Dash app and its machine learning algorithms. Starting, of course, with portfolio selection, and many of you will be familiar with this. We look at the scores for each individual asset. We also have a ranking in here. And once we've assessed the highest probability markets in terms of trending, correcting, or reversing, then we're looking at the daily levels, weekly levels, monthly levels. So intraday, intra-week, intra-month probability levels. And we also have multi-day, multi-week, multi-month, where the algorithm, the Hedge Dash algorithm, assesses fear and greed, sentiment over the multiple time horizons. So it's combining the portfolio selection with the timing techniques of the high probability levels and also the rolling probabilities for fear and greed. In other words, sentiment. When you see, for example, a red bar here, this is a 70% chance of pausing or reversing higher. And in fact, we got that on the 28th, and you can see that's exactly what happened. So we're now entering the final month of beta for the Hedge Dash app before it goes live in January. And for December, we're offering you guys the chance to access the new Hedge Dash web app for free for an entire year. So anyone who is signed up to GMT this month or is a member of GMT when Hedge Dash goes live at the start of January will be allowed to continue using the Hedge Dash app for free for an entire year. Full details of this offer for those of you who are interested can be found in both the description below and in the pinned comment below. And of course, you can always contact us through the GMT site for more information or assistance. Okay, so let's have a look at the scores for the coming week. And the first thing you notice is we do have a risk on tilt going into the beginning of December. And for those of you who remember, in October, we really saw the data deteriorating. We saw risk off coming into the markets. And it took Janet Yellen, the Secretary of the US Treasury, to step in to slow the supply of bonds right at the October low. And coming into November, this kickstarted a massive rally in stocks and it's brought risk on into markets. Now, I do think, because of everything we've discussed in previous videos about how we're coming towards the end of the business cycle, I do think we see risk off coming back into markets. However, the move was so steep, it's going to take a little bit of effort now in order to reverse that. I don't think markets are just going to drop from the sky, SPX. If the market is going to reverse lower, it's probably going to need a bit of time. And I think Janet Yellen has saved Christmas. And even if we get December closing lower for stocks, I don't think the risk of a capitulation or real crash in the markets is now there like it was back in October. So for that reason, I am putting risk on back on the table, at least into the second, third week of December and probably into January. My favorite markets are actually US dollar shorts going into next week. I like the US dollar short versus the New Zealand dollar, versus the Aussie dollar, and also versus the Swiss franc. We'll also look at Euro dollar. It's not my favorite market, and I'll tell you why. We look at it every week, so we will look at it, but the Euro is actually my second favorite short going into next week. And the reason being, even though it's neutral here in the scores, you can see it does have negative momentum in the scorecard. It's telling you the score is actually traveling this way. So when that happens, it's predictive very often of where the score is going to be, in the next week or so. So if you compare that to the yen, which is absolutely weaker, the CAD is absolutely weaker, and the pound is absolutely weaker, the fact is their scores are actually getting stronger, whereas the euro is neutral and getting weaker. So outside of US dollar shorts, I do like euro shorts. We're going to be looking at Euro New Zealand to the downside. That's a risk on trade. We're going to be looking at EurUsd to the downside as a risk on trade. And we're also going to be looking at CAD shorts once again as well. We'll look at New Zealand CAD to the upside, and we'll look at CAD franc to the downside. We're not going to be looking at Aussie CAD next week. Why? Because we have an interest rate decision coming out of Australia, and any Australian pairs that I look at in today's video will only be traded after the interest rate decision takes place, not before. And the same is true for the Canadian dollar, because we also have a Canadian interest rate decision next week. And it's too much for me. I don't want to get involved in a pair which has two interest rate decisions. There's too much potential volatility. So I won't be looking at Aussie CAD, but I will be trading both the Aussie and the CAD pairs only after their respective interest rate decisions next week. And the final markets we'll put on the table heading into next week will be New Zealand and Aussie, and also Swiss franc to the long side versus the yen. So the yen is strengthening the scorecards, but I'm prepared. It's not my favorite setup. My favorite setups are the US dollar short trades, followed by the euro short pairs. But I am going to look at Japanese yen, and they will be on the watch list at least, just to see how they behave and if we get some opportunities to trade Aussie, New Zealand versus the yen to the upside, and also the Swiss franc versus the yen to the upside. So the final thing to note here is you can see that aside from the US dollar, a number of these markets, the Canadian dollar, the pound, the Swiss franc, Aussie, New Zealand especially, we're starting to see greed coming into the markets. So I am bullish on these markets, but it tells me that we may see at the beginning of the week, so when we start Monday, Tuesday, we may see, for example, a little bit of weakness in the New Zealand, maybe a bit of strength in the dollar, and that's the opportunity to fade that going into the back end of the week. So how might that actually look? Well, if you look at the US dollar, you can see we're making our way down, and I have highlighted the 101.50 to the 102 area to the downside. Why? Because very often when yields peak, really before a recession or the end of a business cycle, which is what we see historically all the time, the dollar sells off roughly 5 to 7%. And that puts it kind of in the 102 to the 101.50 zone. So I do think, not just because of the scores, but also the fact that, I would be looking at roughly a 5% sell-off, at least in the dollar, once we see yields peaking, which is exactly what we've seen. In fact, that's what Janet Yellen caused. It does make me think there's more downside in this over the next few weeks, and that's why I do like risk on as well, because a weak dollar is supportive of risk on. But because other markets like the New Zealand dollar, which we looked at, are starting to show signs of greed coming into the markets, and generally speaking, you've got a 70% chance of a pause or a reversal near term, I would not be surprised as they sort of come down and correct a bit to see the US dollar pushing higher at the start of the week. That is not the opportunity to buy US dollars. What that is the opportunity to fade the US dollar from the upper bound. And usually you're not going to test the upper bound and the lower bound in 1 week unless you've got real volatility. Usually you come down, kind of halfway or more. But any pullback in the dollar is viewed next week as the opportunity to short this from the upbound. Or, if we fail to get to there and we start to break out intra-week, which is what we look at, that is the opportunity to look further declines into the lower bound at the 102.22. So going into next week, that's what I'm going to be looking for. I'm going to see if we can start to pull back first and test the upbound. That would be great. And going into next week, I like trades from the upper and lower bounds. Why? Because we've got non-farm payrolls on Friday. And when you have non-farm payrolls week, the Forex markets can be kind of choppy and range bound. So it makes intra-week trading a bit more difficult, but range trading from the upper and lower bounds can actually be fantastic, because if the US dollar pushes into its upper bound, Monday or Tuesday, the chances of this going any higher ahead of non-farm payrolls is very slim. So you have a really good kind of opportunity to fade that. So just keep that in mind next week. It is non-farm payrolls week. Overall, I do actually think that the US dollar is heading higher. And if we look at this on the weekly, especially ahead of the business cycle ending, it does look like we have this first drive up, this one, and we're in a potential second wave. This is something I've been highlighting really since last year, in fact, on Twitter, that I do think the dollar ends with a blow off top and takes out the prior high. And I think as it currently stands, my view is we're probably in a wave two. The only thing is, we need to pull back a little bit more by the looks of it. And it's the 102, 101.50 area that I'm kind of eyeing for a potential bottom here to see if we start to pick up and we start to get risk off in January. And if that's the case, this third wave up would coincide, in my opinion, with a recession and risk off in the stock market. However, like I said, not quite yet. Looks like that has been kicked into at least Q1 for now. So for the time being, dollar shorts are the main play. Okay, so let's have a look at the markets on the watch list this week. And crude oil is on the watch list every single week, keeping an eye on it. And the weakness in crude oil has been something I've been highlighting to the downside, been looking for crude oil shorts, and also highlighted how this is feeding into the Canadian dollar and softening the Canadian dollar. So I do still have a bearish bias on crude oil. What I would like to see going into next week, we're kind of consolidating, but I am looking further downside. If we can pull back next week, any pullback and correction like this is viewed as an opportunity to look for bearish breakouts intra-week. And I'm going to be looking down to the 70.80. And of course, what I really like as well is if we can come all the way back without breaking down and we trade into the 78.29, especially if we pop through this and we test, say, the prior high over here, this would be a great place to fade that move. In my opinion, I'll be looking for that for a near-term short opportunity in crude oil. So the first market we're going to look at is New Zealand dollar, and you can see this market is really trending to the upside. We did have the interest rate decision last week, and I do think New Zealand dollar to the upside is going to be one of the best opportunities next week. We started to consolidate already What I'd like to see is I'd like to see this pull back. And the issue, of course, is non-farm payrolls. So you can, as always, look for the intra-week breakouts where we start to reverse intra-week, we break out, and then we start to pull back and then rally into the upper bound at the 0.6280. However, with non-farm payrolls, you might find the intra-week ones a little bit choppy. So what I'd really like to see with non-farm payrolls week coming up is if we just continue to pull back and we test the prior low over here and the 0.6122, this would be an area I would definitely be looking to step in for a near-term buying opportunity in New Zealand dollar next week. Next is Aussie dollar. Now, very similar to New Zealand dollar, you can see this market is trending high and we had some nice momentum coming in. Just bear in mind, we have the Australian interest rate decision next week, so I'm only going to be looking to trade this afterwards. What I'd like to see is I'd like to see this market kind of correct into the interest rate decision, and then I'll be looking for a breakout. Usually, I won't get involved the same day as the interest rate decision. I like to wait for the following day. Any kind of pullback then would be setting up for a follow through into the 0.6756. Alternatively, and remember, I can only be a buyer of Aussie dollar next week or do nothing. I cannot sell this. So if for whatever reason on the interest rate decision we get a sell-off and we trade into this low, perhaps below the 0.6586, then I'll be waiting. I just want to see this kind of pause. And if it does, and if the reason for the sell-off isn't that great, then I will be looking to potentially fade this to the upside after the interest rate decision takes place next week. Next is US dollar franc. Now, US dollar franc is in a really nice downtrend, and ideally what I'd like to see is this market pulling back. So if we can start to correct in the week, and again, I'm a little bit cautious, perhaps Aussie dollar intra-week is a good one because you've got the volatility of the interest rate decision. But the other dollar pairs, just bear in mind, we have non-farm payroll. So what I'd like to see is you can look for those attempted intra-week breakdowns, but again, they're a little bit more risky in non-farm payrolls week, down to the 0.86130. So we test this level, I would be looking to put profits around here because with a 70% expectancy, you're probably going to hold these levels. That's what's being priced into the markets. But the opportunity I'll really be looking for is if this pulls back and this holds all the way into the prior highs over here, and we push through this anywhere above the 0.8772, I would be looking for a near-term short opportunity in US dollar franc next week. And the final pair for the dollar next week is euro dollar. Now, I definitely won't be wanting to trade this market intra-week because we've got two kind of weak currencies. These are actually my two favorite short currencies, but I look at and have euro dollar on the watch list for you guys every single week because a lot of you want it. However, what I would like to see is I really still have a bullish bias on this market overall. So I don't really want to be shorting this and I don't really want to be trading it intra-week. So what I'll be looking for is I'll be looking for euro dollar to pull back. Maybe we dip through the 1.0773 and we dip through and test this prior high. That would be a great place to start to look for a potential buying opportunity for a short-term bounce in euro dollar next week. If I get this set up, I will consider it. Otherwise, I'll probably be leaving this market altogether next week. Moving on to euro short trades, and look at this market. I mean, this is magnificent. Just a big sell-off here, really strong momentum. This is absolutely not a market you'd want to be stepping in and buying. So any pullback in this market, I'm going to be looking for a nice bear flag correction. Preferably, if we trade into the prior high and there's a nice key of support, it bounces, it breaks, it retests as resistance. So this is right. When you have this kind of one to the upside, one to the downside, this is where you know there's a solid level here. So if we pull back and we retest between this kind of support and resistance area, this is going to be a great place next week to start to look for bearish reversal in Euro New Zealand for a near-term short. And of course, if we start to break out intra-week, instead of coming all the way back, you might find we get a faster market. We break out, correct, and then that's the second opportunity intra-week to short into the 1.7370. But like I say, I'm really focusing primarily where I can on the tests of the upper and lower bounds next week, especially with non-farm payrolls. Next is EurAusd, another magnificent market to the downside, kind of been corrective. You see how we tested this low, and then we broke through with momentum. That's really telling you this market has a high probability of selling off, and this is one of the top ones highlighted in the hedge algorithm. So any pullback in this market next week, I absolutely would not be buying this. Any pullback is viewed as an opportunity to look for intra-week breakouts like this. Very rarely do they go straight to the target down here. Very often what will happen is they'll sell off, they'll pull back, and that gives you the opportunity to short down into, in this case, the 1.6150. But if we continue to pull back, and especially if we test, I love it when we have these levels overlaid onto key highs or lows or key areas of support and resistance. And you can see this over here. This would be a perfect place to start to look for short opportunities. If we come back and we test this low, this low, this low, we retest this as broken support, turning resistance, and we push above the 1.6445, great place next week to start to look for near-term shorts in this market. Moving on to the CAD pairs, and these two markets with the Canadian dollar, so New Zealand CAD, and next we're going to look at CAD franc. These are only after the interest rate decision. These are interest rate decision setups. If I do not see the opportunity to go long New Zealand CAD, I'm not going to be shorting it. I will leave it off the table altogether. So it's on the watch list, but we have to see the right setup on the interest rate decision out of Canada next week. And what I want to see is this: if we do basically nothing, and then on the interest rate decision we break higher, this is the preferable move. I'll then be looking for the pullback correction and the follow through into and above the 0.8446. And of course, this would be the max profit taking zone, because we can push above these levels, especially with big news catalysts. But once you go above here, the odds of you pausing or reversing start to increase greatly. So this is really an area, if you're long and you start to breach this level, this is where you want to be booking profits, because in all probability, that's going to give you the best edge. The second thing is, if we get the market just kind of consolidating or pulling back, or we sell off for whatever reason, I still cannot be short this. So we trade into these lows over here and we breach the 0.8291. I will be looking for a potential, double bottom or a near-term reversal pattern to the upside, as long as the reason for selling off on the interest rate decision is not too strong. For example, if the Bank of Canada come out and they double interest rates, I would not be stepping in to buy New Zealand CAD. Obviously, they're not going to do that. It's an extreme example, but you get my point. If there's a very hawkish catalyst for the CAD, then I will just leave the CAD pairs altogether. If it's neutral, as expected, or bearish for the CAD, then I'll be interested in these setups. Next is CAD franc. Now, this is another market that's been kind of choppy, and I do favor short positions in this once again, but only after the interest rate decision next week out of Canada. So I'd like to see this kind of correct, push higher, and then if we get the initial momentum from the interest rate decision, I'll be looking for a consolidation and then a sell-off follow through into the 0.6385. But if we just instead consolidate and then we pop higher, we test these highs, maybe we even pop through and test this low. This would be, once we get above here, very much like throwing a tennis ball in the air, you can push above it, but it starts to run out of steam, and then you start to see it pausing or reversing lower. So if we get that opportunity after the interest rate decision, then I will be looking also for a near-term short in this area. Again, as long as the catalyst is not hawkish. If it's neutral, as expected, or bearish, I'll be looking for that. So wrapping up Forex with a couple of the yen pairs, and New Zealand yen to the upside is my favorite market versus the yen, but I prefer US dollar shorts and euro shorts next week. So any pullback in this market is viewed as an opportunity next week to look for bullish breakouts intra-week. And I'm going to be looking for trades into the 92.25. And if we pull back, and especially with non-farm payrolls, if we pull back and we start to test, you can see there's a really nice, again, key area of resistance here, here, here. If we come back and we test this area, so we breach the 89.88 to the downside, in this area, I would be looking for a near-term bounce given the opportunity next week in New Zealand yen. And last but not least, we have Aussie yen. This is going to be also a potential interest rate decision trade. I can be long or do nothing. So selling this market's not an option. If we get a bearish catalyst from the interest rate decision out of Australia, I will leave the Aussie pairs. If it's neutral or it's a hawkish catalyst for the Aussie, I will be looking at taking these setups. So any pullback into the interest rate decision, I'm going to be looking for a break higher on the interest rate decision, and then I'm going to wait to see it settle down. And then that's going to provide the opportunity for a follow through into the 99.24. Alternatively, and preferably I think going into next week, if we get the interest rate decision, we sell off and we start to test this low and we start to push below this bound, maybe even test these lows over here. This is where I would look for a near-term bounce and buying opportunity next week in Aussie yen. Okay, so wrapping up the market with gold and silver, and we're starting with silver because out of the two, I do have a bullish bias on both. Why? Because I am looking at dollar shorts next week as a main theme. But silver is really the standout against gold and silver. In fact, it's the #1 ranking long idea in the Hedge algorithm for commodities. And I do like this to the upside, but there's one thing to note. Notice how we're really lacking momentum in this market, It is worth noting that in all probability, this market, in near-term circumstances, has roughly a 70% chance of pausing or reversing. So if you jump in at these levels at the open or for an intra-week breakout, there's about a 30% chance that it rallies higher, but there's actually a much bigger chance that this market corrects. And it goes back to what I was saying at the beginning of the video, where I do think we probably see some near-term strength in the dollar. It tests its upper bound, and with that, we get the correction and we get the opportunity for a pullback in silver. So I do like silver next week for an intra-week breakout into the 26.40. Or if we pull back and we test these lows and we start to breach the 24.58, this would be the second place, especially if we test this deep. If we come down, we test this deep, we even come all the way down, test this high, that would be a fantastic opportunity. Anywhere below this level, and obviously the deeper you go, the better, but anywhere below this level, that would be where I'd be looking for a near-term bounce in silver next week. Really good long idea by the looks of it heading into next week. Wrapping up the video with gold, I also like gold to the upside because of my bearish bias on the dollar. We did have a nice push higher, so what I'd like to see is, ideally, because I think on balance, probabilities are showing that there's a good chance we pull back at first in the dollar a little bit higher, and I'll be looking to fade that. You know, New Zealand dollar perhaps comes back and to the upside, tests its lower bound, you know, that's the opportunity to buy. I wouldn't be surprised to see gold kind of pulling back. Maybe it pushes a bit higher first, but then pulls back. That would be the opportunity next week to start to look for an intra-week breakout into the 2113. Or what would be quite good here is if we pulled back and we breached the lower bound here at 2028 and we pushed through here and we in fact tested this high, that would be a great place because then you've got the broken resistance turning support down here and you're essentially oversold on the week. So you pull back, this would be a great place to look for a bouncing gold next week. So that is it from me for this week, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day where I go through the best markets as well as sharing the real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, anyone who signs up to GMT in December also gets the brand new Hedge Dash trading app completely free for 12 months. This offer expires at the end of December.